Hello, traders. This is Michael coming to you from GammaEdge on Thursday, May 22nd, with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with the three pillars: sentiment, structure, and trend. Currently looking at our market trend model, which is based on the tick index, and you can research that at your favorite investing website. Quick takeaway from the tick index: it is just buying versus selling within the overall market. Our key indicator that we look at to start with is this bolded white line. This is our cumulative tick, again, aggregated buying versus selling. And then we add some moving averages to give us an overall trend and add a time component, obviously, onto it to add a trend also. So yesterday we started to see some weakness coming into the market, pre-market yesterday. We discussed about the consolidation or flattening of this cumulative tick. That way, an area where we might see some profit taking or a pullback within a longer term uptrend in the overall market. And we wanted to look to see if this bolded CT started staying above the moving averages or we started living below these short-term moving averages, indicating we may see some more weakness come into the market as we saw into the afternoon yesterday. The new highs versus new lows breadth indicator, we did still have new highs outpacing new lows. So still that was a positive sign on the breadth. The filtered cumulative tick, plus 1,000, minus 1,000, we started seeing those institutional orders come into the downside selling starting around that 1 o'clock time frame, and you see this cyan line dropping below the zero and continuing to the downside into the close. And obviously the cumulative tick was living below zero most of the day. So this was an indication that there was more selling occurring, as also indicated by our bolded cumulative tick here. So again, weakness was occurring for most of the morning, and we discussed this that we could see a possible pullback with an overall uptrend. Again, spot price continued to drop, but then our larger look back period, red is above cyan still. So again, buyers are still in control in a longer look back period, but this can change. So we'll continue to watch this day over day and keep you updated on the progression of our market trend model. What we would want to see is this bolded CT start coming down into this colored ribbon or staying just above the colored ribbon, start flattening out, and then possibly moving back to the upside. That would indicate that we're having a short-term trend change back to the upside and that buyers are trying to step in and take control on a shorter term, back control on a shorter term time frame. And that would also need to be met with the filtered cumulative tick living above the zero line and progressing to the upside, as well as our cumulative tick also. So again, we'll keep you updated on this day over day. And this is our intraday, so we may provide some updates also intraday to let everybody know what's occurring. Moving on to the SPXA, this is our cruise ship. These are obviously longer term, larger expiries, as denoted over here by the purple tiles. Again, this is institutional or larger market participants. We are still call dominated above and below spot price, so it is a bullish state, but we begin to notice some red in the money puts becoming exposed above spot price, as well as some out of the money put speculation below spot price. We discussed this yesterday, and we said if we continue to see the erosion above spot price, then we might see some sort of pullback, again, within an overall larger uptrend in the market. So again, we'll continue to monitor this day over day. This is just kind of the first weakness that's showing up. And if we're going to have a full change to a bearish state, we would most likely see this continue to erode, and these net deltas would start changing to red, as well as the net OIs. You can see that out of the money put speculation to the downside showing up here. So again, we'll continue to watch this. Again, these are contracts that turn over less frequently. These do exert force on the overall market, but we continue to watch this as an overall positioning on a longer term time frame. We discussed the delta balance for the SPXA, that we were just seeing it basically maintain its overall structure sideways, and that's continuing to what we see on out in projected time. So institutions are not making massive changes in their overall positioning at the moment. We discussed the SPXA GEX ratio. This obviously is a put call ratio with a time component. So it's a better put call ratio because we add that gamma time component into it. And we denoted that we were seeing some weakness in the GEX ratio, pulling back as spot price was consolidating sideways. So this was going to resolve either of two ways. That would be the GEX ratio would start moving back to the upside, or we'd see spot price pull back. And that's what we got yesterday towards the end of the day. So this GEX ratio moving to the downside is just indicating that short dated call gamma is leaving the overall environment, increasing the short dated put gamma. So just again, more weakness may be coming into the overall complex, but we are maintaining above that one level, which is indicating that call speculators are still in control, also denoted in our web app by the call dominated tile there. All right, so moving on to the SPXP, we've kind of just added all three of these charts in a single viewable form. This is our web app. Obviously, we are put dominated now for all expiries. All these tiles are turned on, so we'll continue to watch this. This put dominated is changing from yesterday, which was call dominated, and that was met with this in the money put above us being exposed due to out of the money call speculation dropping. Again, we'll talk about that over here on the delta balance as well as the GEX ratio. We do see some in the money calls below us still, but again, erosion of the overall complex is happening, and that would be indicating some more weakness and a possible move towards a little bit larger pullback to the downside. We've denoted 5,800 as that key level to hold above for today. We're bouncing off of that pre-market, so we'll see how we interact or act with that as we move up and down the overall complex. We denote the transition is above us. Anytime we open below the transition, we are a little bit more cautious and look for a little bit more weakness in the overall market environment. And moving to this put dominated does increase the overall volatility of the complex. So that just means we may have larger outsized moves, a little bit more choppier type action within this overall structure until we move to a little bit more call dominated, dampened volatility, positive gamma environment. So again, we'll continue to watch this. Overall, the structure shift from the call dominated to put dominated on the all expiries. All right, delta balance for the SPXP. We denoted yesterday that we were seeing some weakness come into the overall complex, and whether this was going to change to an overall put dominated structure and see a larger market pullback was up to how the market participants were going to position. And we did see that weakness continue to come in. So again, we kind of had those first red flags or cautionary flags coming into yesterday. So make sure you watch our pre-market prep. And then we saw that come to fruition yesterday into the afternoon. And again, we spoke about this GEX ratio dropping. Again, short-dated call gamma leaving the overall complex, being replaced with short-dated put gamma, or at least the calls closing via profit taking, and then exposing more short-dated put gamma. So again, we were discussing weakness yesterday, and that come to fruition pre-market yesterday, and that come to fruition through the afternoon. So make sure you check out our previous videos. All right, moving on to the SPXP 0 DTE, obviously just the expiry for today. Weak total OI, again, low volume heading into the overall open for today for a Thursday. Kind of anticipated as we do see this on Tuesdays and Thursdays sometimes. So we'll continue to watch that. Put dominated above and below spot price. Net GEX is negative 14,000. Expected move is 1%, so 62 points there. Key takeaway here is we'll be opening below transition, so in a little bit more weakened overall structure and environment. We are put dominated above and below spot price. You'll denote those red negative net deltas here. It's going to take a significant amount of out of the money call speculation or movement in spot price to overcome this overhead pressure. So again, opening below transition, drunken sailor range for today is 5850 to 5900. We'll most likely open below that also. So the kind of a couple thesis, our trading plans for today would be spot price bouncing to the bottom of drunken sailor range. We see some sort of failure or some sort of consolidation, and then we see a failure back to the downside. That gives us an opportunity to short, possibly back down towards 5800, 581520 would be our first kind of area, and then down towards 5800. Obviously, we'll be watching the market trend model as well as our volume command intraday, which indicates where the volume of market participants are transacting, and are they transacting to the upside or the downside, and who is winning that battle, call speculators versus put speculators. The next thesis would be that we take back the drunken sailor range. It might be a little choppy within this overall area. Obviously, you see these major strikes and gradients here, and then we had the opportunity to move back towards the transition area. If we do get up towards the transition area, this may be an opportunity to see some overall stalling within the price action, and if we see a failure, that would be an opportunity to short back to the downside, to the bottom of drunken sailor range, or possibly through the bottom of the drunken sailor range. If we do take back the transition areas and the drunken sailor range, we still think it's going to be difficult to move to the upside. Obviously, that key strike at 5900 is going to be very difficult to overcome again unless we see a significant amount of out of the money call speculation. So basis our thesis for now would be upside price appreciation will be very difficult unless we see this overall structure change. We may have an opportunity to short as we move into these key areas overhead of transition. If we do take back some of these areas, then we would be a little bit more risk on, basically taking back the 5,900 in transition area. Then we have an opportunity to move to the upside if that's met with overall out of the money call speculation, as well as the MTM turning up and the vol-am command indicating positive call and put centroids. SPX net stack command, this is our highest sensitivity levels. We've discussed 5,800 as a key level to the downside. Obviously in the money calls sitting at 5,820, and then 5,850 we do have in the money puts to the upside. That will be a difficult headwind as you see the overall charm there. In the money puts 5,860. Again, if we're below this level for the day, these will continue to grow and move towards -1. So this again will be an overall headwind for the price appreciation. So multiple headwinds takeaway today, multiple headwinds on price appreciation. We do have some areas to the downside that we will look for supportive type action, but an overall upside price appreciation may be difficult is the key takeaway for today. Moving on to the trading view chart, I've overlaid obviously our GEX and DEX levels as well as our drunken sailor range just to give us a price visual. And as of now, before starting this video, I was looking around 58.20, 58.30 was going to be close to our opening area. This will COTMP down at that area, so that'd be an area that we would look for price to stall. And then obviously we have 5,800. Again, just went through the thesis again. If we move back up towards the bottom of drunken sailor range and see some stalling, it may be an opportunity to short. If we take back drunken sailor range, it will probably be extremely choppy within this overall area. And then we'd look for a move up towards the bottom of the transition areas. That may be an opportunity for some sort of stalling. And then a short opportunity, again, taking back transition, we'd be in a little bit more positive gamma call dominated look. So then price appreciation could move back to the upside. Again, going to be extremely difficult. So with that, I hope everybody has a great day. We'll be in the Discord answering questions. Again, welcome all the new members. Make sure you're checking out the SPX game plan that's posted. Swing game plan will be posted. Market trend model game plan will be posted. And this video will also be posted for you to review. Again, check out our pre-market preps every day as well as our post-market recaps. Those are essential in understanding how to go from pre-market prep and SPX game plan to implementing our tools and trading plan and becoming successful with GammaEdge. So with that, thank you everybody, and we'll see you in a few minutes.